Hey, welcome back. So please like, share, and subscribe to the channel. Consider donating so we can keep this going. So, wanted to make a brief video about my understanding of digital assets and the tokenization process, and what it all kind of is. So, as we progress into a more digital age and long distance transfer of wealth or assets becomes more necessary, um, we inevitably develop better ways of doing it. So we've gone through many transformations of this process in the United States. So we started out using, even as a species, gold um, to notes. Now potentially further tokenization of the notes as well as assets and services. So in the United States, the currency went from gold representing labor to fiat money representing gold, representing labor, to fiat money representing future social liability and tax obligations after the Great Depression, um, to fiat representing the ability to purchase oil as well as the future social liability and tax obligations of the population within the nation of the given fiat currency. Um, and today, it seems fiat is being completely decoupled from labor. So with each step, um, my personal belief is that it reduces the trust within the system. Each step um, moving away from a more concrete representation of a product, service, or good um, further erodes confidence, and it erodes the confidence of nations and weakens it. So blockchain technology allows proof of ownership of a tokenized asset, which reduces the inherent distrust that exists within a economy and groups of people, especially trading over long distances. So, but here's the catch: a token can represent nothing. Um, it can represent anything someone perceives it to be, or it can be attached to a physical asset and represent exclusive ownership of that asset. So, modern day tokens you may encounter, maybe like a metro token or a bus token or a casino chip. A token representing a currency, but not the currency itself, but able to be redeemed or even potentially traded to someone. A bus token is a great example. You pay for the token, you use it to receive a service, a bus ride. You could even potentially trade it to someone who needed a bus ride. In this way, many things we encounter daily are actually tokens that allow us to receive some sort of benefit within a closed ecosystem. The tokens require the faith of the holder in its value and the ability for it to be transformed into a service, currency, or product. So since a token is just a representation of the ability, even a fiat currency could be considered a token in that you can exchange it for products and labor within a closed system, your nation. In the blockchain world, a token exists within a blockchain, such as the ERC20 tokens, which exist within the Ethereum blockchain. Um, they provide a similar functionality. So BAT, or Basic Attention Token, or BAT, is a token within the Ethereum blockchain that is governed by rules set by the token creators and distributed by those rules and protocols. So they perform a function. The Basic Attention Token function is it's used as a reward system within the Brave browser ecosystem to reward users for viewing ads. Those tokens can be traded into fiat currencies used to tip creators or traded into other cryptocurrencies. So the important thing to note is the tokens specifically has a function or utility to an end user. Um, BAT's utility is that it allows easy and seamless tipping of content creators as a form of patronage. Um, a tipper earns the tokens just by viewing ads, which they would have seen on a different browser anyways. So it creates a system in which the person receiving the BAT for viewing ads doesn't really have a vested interest in them, so they'll feel more obligated to tip content creators instead. I mean, or they can hold it. I mean, I have some that I hold myself, but because the price does fluctuate, but then people can take those tokens and sell them to other people who want them. And there is a pretty good market for it. But that's the key. Um, there needs to be adoption and use in order for there to be a valid market. And, you know, as we said, a token can represent anything. But if you don't have someone who's willing to exchange you a service, product, or another currency for it, it's pretty much worthless. So let's consider tokenization of real-world assets into a blockchain. Um, but well, actually, let's go over a modern investment token, quote unquote token, such as like a REIT within a broker. So on an average broker site, when you buy the REIT, you submit a request to the broker to purchase the REIT, who requests the stock in name only from an organization called Depository Trust Company. This is within the United States. So the Depository Trust Company records the purchase, but manages the records and holding of the actual stock. So the broker never has physical control of the stock. You don't have the physical control of the stock. The Depository Trust Company does. You have the right to buy or sell the shares, but you never have complete ownership of the actual note, such as the ability to move that share to new exchanges or offer it in an open market. So this enables a situation in which multiple copies of an asset can be sold. This is how, you know, derivatives markets work. You look at the silver and gold market. On the paper silver and gold market, there's about 174 paper ounces for sale for silver for every 1 ounce physical coming out, and 88 for gold. So this creates distortions in the market and reduces trust. I mean, who's left holding the bag at the end of the day? If you actually want something physically and you don't know how many other people also have claim to, quote unquote, your ounce that you have ownership of. So a bank account's another example. You know, you put your money in the bank, you don't actually own the currency anymore. They do. You have the ability to use and withdraw it. You're the secure or an unsecured creditor to the bank, but the rules for withdrawal are set by them, and those rules can change. They could change overnight. I mean, you know, you want to withdraw $10,000 or more, you need to fill out some paperwork to make sure you are not breaking any laws. You want to withdraw more from an ATM? Well, you can't. You can only do a certain amount from an ATM. You know, once it's in the bank, it's not yours anymore, and it's a different form of money. It's not the physical money anymore. It's a tokenized version of the US dollar. Um, which is pretty interesting. So tokenization on a blockchain, a lot of the tokenization that happens on blockchains aims to solve these problems. Most of them don't solve it, but some of them solve the problem. The holder of the token, as a holder of the token, you are the exclusive owner of that token, and you can do with it as you please. You can send it to anyone who's able to receive said token, and you know, any wallet that's able to hold Ethereum is able to hold any token built on the Ethereum blockchain. So it's pretty easy to send and receive these things. Tokenization creates a system in which the fractions of shares of an overall unit can be sold. So say Consider the sale of a house, right? The house could be represented by one token created, say you create it on the Ethereum blockchain, which is actually very easy to do. I looked up how to do it, and it's not anything, anyone could go on there and you pay the processing fee in gas, Ethereum, in Ether gas to create the token. But anyone could go on there and make any number of tokens they want, which is pretty cool. So, but that's the dangerous part too, but we'll get to that. But so say you create one token representing the house. A group of 5 investors may want to purchase the house. So they pool money and each gives 20% of the final cost. That one token can be divided into fifths and each person receives 0.20 house token. In this simplified example, the 0.20 house token would represent a right of 20% of the profits from rental or resale and 20% voting rights for the home. A person could then sell their 20% to another person outside the initial network. Everyone in the network would be able to see that the sale happened, how much the sale went for, and that person and the additional person would now be entitled to 10% of all earnings. So this enables trust and transparency in a system that's inherently distrustful. So that's the positive part of tokenized physical assets on a blockchain. So here's the issue. As I said, it's very easy to make these tokens and exchange them. So there's a high risk of fraud within the system. But that's where looking into doing tons of research and looking at the contracts which govern the actual tokens is how you determine whether it's real or a fraud. You know, just as anything in this world, you need to do a lot of research before buying or selling anything or considering using any specific blockchain, cryptocurrency, or token because there's so much fraud out there, so much fake stuff in the physical world, the digital world, everywhere. So you just must research. Otherwise, you won't make it in the future. You know, lots of research. You know, the days of being able to kind of just gamble and win money on stocks and stuff, I believe is over. And it may never have really been there. Some people get lucky, a lot of people don't. But so as we're saying, many of the tokens out there right now are completely worthless. I can't tell you how many I've seen that say things like, this token aims to be the first truly democratic token in that it has no value except the value applied to it by the users, and they determine its overall cost and they can use it amongst each other to buy and sell things. And it's like, that's anything you can do that with. I could do that with shells if I find someone who's willing to accept my shells from me. And some people like making stuff out of shells and they might want my shells, but it doesn't, it's, you know, they hype, they send out these white papers or um, documents with lots of buzzwords and lots of fake info. There's no real substance to it, and it catches people's eyes, and then they buy these things in a initial coin offering or initial token offering, and then end up just getting obliterated because the value goes near zero because it's so easy to make these tokens. So you have to be extremely careful what you look into buying and why you're buying it, and think about the following. Will this item give me utility? Will this item enable me to purchase services, purchase products, or exchange it for a different currency when I want to at a rate that I might want, right? So it's something to consider. Um, you know, the receiver still needs to be able to trade the token for the product, currency, or service. So without adoption and recognition, they're worthless. Undoubtedly, as this continues to grow as a field, there will be a ton of fraud um, as this gets rolling. I mean, it'll be the equivalent of people selling snake oil, but long term, um, this is a revolution that stands to streamline and democratize the way business and finance is done throughout the world. And I'm pretty excited about it. I think that it's an amazing opportunity, and I can't wait to see where it goes. I saw that the Tezos blockchain, they're working to tokenize about $300 million worth of real estate in Costa Rica to enable fast, seamless, and transparent trading of it, which I think is pretty cool. Um, Hopefully, it'll be done quickly and efficiently and properly, and they can use it as a model for the rest of the world. So, yes, what do you guys think of tokenization and digital assets representing physical assets? I mean, I use the example of a casino, with the chips. So a casino chip is a token that is able to be used within inside the casino. And it has value because you could take that chip and you can exchange it for US dollars, which will allow you to buy goods and services. And undoubtedly, in an area like Las Vegas, I'm sure there are people who are willing to perform services for casino chips because they can go, well, I don't even know if they use casino chips anymore, but in the past, I'm sure they'd be willing to do such things for casino chips because they can just exchange them for food or lodging within a casino and such. So that's a good example of how tokenization works and how you should think about a token on a blockchain. It's not people, there a lot of times people buy these things, you see, oh, this token's 10 cents, Bitcoin is $6,000, maybe, oh, maybe this thing will go to $100 and I'll make tons of money. So let me put a bunch of money into this. But, you know, the underlying use of the token is, I mean, the underlying value is the token's use. That's what it's meant to be used within the closed ecosystem of the blockchain in which it's created on. Um, so and that's just what it is. So you got to be careful. And of course, some of them probably will go from 10 cents to 100. Others will go from $20 to zero. You know, So you got to look at what it is. Does it provide you value? Can you buy services with it? Can you exchange it for currency? Can you buy products with it? And that's it. So again, I think it's a pretty awesome opportunity, and I'm extremely excited to see where it goes. And I would like to see tokenization of, you know, my brother and I talked about this. So tokenization of a deed or a title to a house, right? So when you buy a home, you have in the United, at least the United States, you have to do a title search, and you typically have to buy title insurance because you have to make sure that no one else has ownership or claim of your home through the title. And the title insurance basically says you did a title search. If someone comes and claims that they own your home, we'll represent you and make sure that you actually get to keep your home and that their false claim is negated, or we'll look into what happened, how they got a second title or such, and we'll determine who actually owns the home and subrogate the parties. So tokenizing the deed or title to a house would make it so whoever, there's only that token for that deed within a real estate ecosystem, and whoever owns that token is the owner of the house. And that's it. There would be no arguing about it because there is only one token connected to that house on a blockchain. So that's a cool use of tokenization that I could definitely see coming. And honestly, I'd be down to work on it myself with people, but I'm not quite there yet. Maybe one day. But, what are some other possibilities that you think tokenization could um, lead to? And what real world problems do you believe could be solved through digital assets and tokenization, as well as what are some other issues that you see with it and problems, inherent problems with it. I mean, so one thing I just thought about is that say you have two different blockchains, Ethereum and Tron, and on those two blockchains, you tokenize the same asset. So now we're running into the double asset issue. So that's something to think about, and maybe there'll be ways in which you can prevent that or research that easier today. So yeah, we'll see what happens. But overall, I'm excited. Like, share, and subscribe. Thanks for watching. Have a good night.